Hello, and welcome to the Whale Hunting Podcast, where we shine a light onto hidden worlds of money and power. I'm Bradley Hope, and this week I'm speaking to Duncan Mavin, a business journalist, former chartered accountant, and now author of a second book called Meltdown: Scandal, Sleaze, and the Collapse of Credit Suisse. It's about the Swiss bank's implosion in 2023 and the years of corruption and secrets that precipitated its collapse. Welcome, Duncan. So, Duncan, tell me about how you ended up writing this book about Credit Suisse. Obviously, you have a long career in financial journalism. You were a chartered accountant before that. You were at the Journal. I think you've been to other places as well. And so just kind of explain to me, so the last book was about Greensill. Maybe you could just briefly talk about that and then kind of describe how you ended up, the journey from that book to this book.
Yeah, okay. So Greensill is the place to start, I think. So Greensill was this scandal that I had been reporting on and came across and wrote a book, as you said. It's this fintech company that is selling investments to clients that are essentially backed by loans. Turns out the loans aren't really any good. The company collapses. And the reason this taps into Credit Suisse is that the investments for the loans coming from Credit Suisse's clients, $10 billion of it. And at the time, it was kind of hard to see why Credit Suisse were involved and so on, and really hard to see what the impact was on Credit Suisse. It just seemed like another scandal they were involved in, and I was much more focused on the Greensill piece of it. Over time, I came to kind of realize that actually this was really important to Credit Suisse's story. Not only did it show kind of like a lax approach to their clients and their internal procedures and so on. Not only had it cost their clients several $1 billion, but it had also kind of exposed like a real, culture that was really rotten there, where in fact they didn't really seem to care about the clients. So they lose billions of dollars of clients' money. And what they also lose in the process there is the trust of their clients. And I think, I fast forward a couple of years, Credit Suisse collapses. And I think the Greensill story, suddenly I realized it was a much bigger deal. It had actually been kind of the start of them really, really losing the trust of their clients. There's another aspect to it that I think is really important, which is that one of the investors in Greensill was SoftBank. And SoftBank also happened to be a big client of Credit Suisse. So one of their biggest fee sources in the investment bank. And they kind of fall out over the Greensill crisis. So they're still suing each other today. In fact, there was some stuff just in the last few days, a $440 million lawsuit they've got going on, even though Credit Suisse doesn't exist anymore. And so the Greensill crisis sort of lost them their biggest investment banking client, and it lost them the trust of some of their wealthiest kind of individual, wealthy individual clients. And so it was really kind of the beginning of the end for them. And that I only really fully understood that like after I'd written the Greensill book, which is kind of the nature of these things. And then I didn't think too much about it until Credit Suisse collapsed. And right before it, I knew it was going down. At the time I was working at the Washington Post, and I'd written a column in the Washington Post saying, I think this is going to end, and it's not going to end well. And so as soon as Credit Suisse collapsed, my agent is on the phone saying, hey, you remember last summer you said you could write a book about Credit Suisse? Well, what are you going to do? And so suddenly I was like, oh, well, yeah, maybe I should revive that idea. And I started digging around and trying to figure out if anybody would talk to me about it. I mean, that was my key concern, is would I have enough sourcing? I knew the Greensill story inside out, but Credit Suisse is a much bigger story. Did I have enough sourcing? And I was kind of humming and hawing, would I do it? Would I not? And I got a call from somebody who said, if you're interested in writing a book about Credit Suisse, just totally coincidentally, I hadn't been digging in this particular direction. If you're interested in writing a book about Credit Suisse, I'll talk to you, and I'll get everybody I know to talk to you too. And it just felt like a sign, I have to do this book now. I can't say no to this kind of opportunity.
Yeah, well, it's also nice because there's not a lot of great investigative books about institutions that are not predominantly in the United States. In the UK, there's a bit more, but then Switzerland, there's hardly anything covered, And I feel like, it's in a crisis when you can really find things out about a company, or like when the tide comes out, you can find all the skeletons on the shore, so to speak. So, but can you kind of contextualize Credit Suisse? The average person has heard about Swiss banking, and I guess they would say that that's something to do with secrecy. How does Credit Suisse fit into that? What is, as of the collapse of Credit Suisse, what was the state of Swiss banking as we know it?
Yeah. Okay. So Yeah, I think you're right. People know about Swiss banking. They've heard of Nazi gold and they've heard of kind of banking secrecy and all that kind of stuff. And it's a bit of a kind of, it's almost like a meme, right? Swiss bankers. But the reality is Credit Suisse at that point was one of the biggest banks in the world. It is kind of two banks in one, really. There's a Swiss private bank, which kind of deals with wealthy individuals, many of whom want to hide their money from tax authorities, or they just want to put it in a place that's renowned for stability and secrecy. And that has grown up, it's 150, 60 years old, really kind of hushed halls and things like that in Zurich. And then the other piece of Credit Suisse is essentially US investment bank, New York and London investment bank, which was called First Boston. And Credit Suisse bought First Boston kind of over a period in the 80s and 90s and merged it all into one. They changed the name post the dot-com bubble, actually. They changed the name, got rid of First Boston, and it all just became Credit Suisse. So in fact, you've got kind of two pieces of the bank. There's a Swiss secretive, very private, secretive bank. And then you've got this like hard charging investment bank. And First Boston was always known for being like this very euphemistic, innovative, cutting edge, which basically means riskier, pushing the boundaries on things that are acceptable. And so these two cultures are sort of at the heart of what goes wrong a little bit there. The sort of secrecy combined with the riskiness is like a really toxic mix there. The other piece of the landscape is there's two big Swiss banks, Credit Suisse, UBS. Lots and lots of other Swiss banks that are kind of much smaller, but the two big ones are Credit Suisse, UBS, and they're huge rivals. Executives go back and forth between the two from time to time. They kind of really hate each other. UBS had got into massive problems in the financial crisis, almost collapsed and got a bailout from the Swiss government. Credit Suisse never needed a bailout, not from the Swiss government. It got one from other sources, private sources. And so they kind of really hate each other. But post-financial crisis, UBS has come out much stronger. Credit Suisse is sort of striving, trying to catch up with the big brother, really. And that's another element that's going on, is this kind of second-class investment bank, not as good as the Goldman Sachs's and so on in New York, and the second-class private bank in Switzerland. And so they're kind of always chasing better banks. So you add that kind of secrecy, riskiness, chasing other people, it's a like toxic mess waiting to happen.
So Credit Suisse collapses, and suddenly all of the skeletons are visible on the ground. So let's walk us through the kind of scandals of Credit Suisse, and also kind of introduce some of the characters that you explore in the book as well.
Yeah. So there's like an endless list of scandals. I mean, it's almost ridiculously frequent. Like one a year for going back 30 odd years, maybe even longer, actually, going back to probably the war. There's stuff that happens in the 60s and 70s. So there's a scandal called the Chiasso affair, when Credit Suisse is still a sort of small Swiss bank, and essentially there's one of their kind of fast rising branch managers sets up a branch on the Italian-Swiss border, which effectively is a branch for money laundering, and does incredibly well as a result, and starts to rake in a huge, enormous profits. And everybody thinks this guy is great until it turns out that actually he's kind of wasted the money on other things that he shouldn't have. And so the bank kind of comes near to collapse actually at that point. And that's kind of the first one. It's like a proto scandal. In the 90s, the sort of big thing that happens to them, and it happens to all the Swiss banks, is kind of Nazi past is really exposed. And it's kind of US politicians that really expose it. And it's one of the things I found most shocking about it, is that, as recently as the 1990s, they're kind of trying not to talk about what they did during the war. And what they did was horrendous, really. Not only did they kind of launder money that the Nazis had stolen, but they also took money from Jewish people around Europe and then didn't give it back to them after the war. Said things like, you don't have the right documentation, or I need to see a death certificate from people who died in Auschwitz, and things like that. And they cover this up in the 90s. At the same time in the 90s, there's a whole bunch of little mini scandals that go on in the investment bank. One called the Flaming Ferraris scandal, which is kind of this crazy group of traders in London who are out. Flaming Ferraris is the drink they like to drink, and they really flash, and they kind of, they're doing a lot. They're in the newspapers quite a lot here as these new Wall Street types in the city of London. And it turns out, again, of course, there's like insider trading and all that kind of thing. So I'm gonna move you a bit further forward though, because I could go on and on and on. The list of scandals is crazy. The ones that start to really bite later on are well, there's a few of them, but the one I think I'm really interested in is the Mozambique tuna bond scandal, which I think will really echo for you in particular, because it's similar to the other things we've seen around the world. So this is Mozambique, early 2010s. Mozambique has found oil, and that's going to transform one of the poorest countries in the world into a rich economy. And they go out looking for money to help them secure the oil, secure the platforms, the ports, all that kind of stuff. And some Mozambican officials hook up with a Lebanese company called Privinvest, which is a shipping company. And Privinvest say, yeah, we'll do all this work. We need some financing. So they approach Credit Suisse. Credit Suisse get a report done on Privinvest to say, is this the kind of person, is this the kind of group we should work with? The report comes back and it is full of red flags. It calls Privinvest the king of kickbacks, and lots of language like that. These guys they're definitely going to be kickbacks. They're definitely going to be payments to officials. Credit Suisse ignores that report. It isn't what they wanted to hear, so they just kind of ditch it. And guess what happens? They give $2 billion to Privinvest, who passed $200 million of that on to various Mozambican officials, and $50 million of it goes to a Credit Suisse banker, a guy named Andrew Pierce, who pleaded guilty eventually in the US to fraud. He essentially agreed to cut Credit Suisse's fee in order for him to personally benefit, him and a couple of colleagues. And he then became a witness against the Mozambicans and against Privinvest, and those trials are still going on. And this is 7-8 years ago now. So that was a really big one, and kind of a sign of how bad things were in that part of the bank.
But how did the tuna? What's the tuna part of that?
Oh yeah, sorry, the tuna. It's such a complex story. So what they said was they were going to build a tuna fleet with the $2 billion. They were going to build ports and a tuna fleet. What they actually built was a bunch of high-speed boats for messing around in, and some military equipment, and just a totally different. The money was spent in completely different ways. It sort of sounds like not that big a deal. I mean, it's $2 billion, but it sounds like not that big a deal. Except that what happened was, when the IMF found out about it, they withdrew funding for Mozambique. It led to kind of a political change, and the economy collapsed, and sent Mozambique into a tailspin from which it has not recovered. Wow. So Credit Suisse really at the heart of a scandal that took a country that was on the cusp of becoming a great economic success story and turn it into an economic disaster.
And it was also emblematic of that period of time where there's a lot of bad bond frauds,
exactly.
like 1MDB and Tuna. I remember that they were all kind of categorized at the same time.
It feels very similar, I think, to 1MDB in some ways. Basically the money being kind of spent on something that wasn't what it was said to be spent on. The bankers kind of know about it and kind of getting involved, and the results being a disaster for the country.
And what next?
So what next? I mean, there's a private banker called Pierre Lescaudron who has passed away, and Pierre was actually a French accountant who he had worked in like luxury goods in Russia at some point, and kind of got to know Russia really well, and decided this was where he was going to make his money. He joined Credit Suisse and became their star kind of private banker to Russian oligarchs and Eastern European oligarchs, and brought in a lot of money. Along the way, time after time after time, the compliance department finds problems with his work, but because he's bringing in so much money, they kind of waive it. In fact, he keeps getting paid massive bonuses, even as they find lots of problems with his work. It turned out what he was actually doing was kind of front running some of his clients. So he was aware of the things he was going to buy with their money. He's taking their money and investing it. He knew where it was going to be invested, so he would get in ahead of them. Not only was he doing that, but he was putting them into things that were not necessarily things they'd want to invest in. And so this eventually blows up because these investments aren't very good. And so he's exposed, and it turns out like billions of dollars again have been wasted on behalf of pretty powerful clients, including the former prime minister of Georgia, who then goes after Credit Suisse and after Lescaudron. Lescaudron ends up in jail. He died quite young. I mean, natural causes, as far as anybody knows. And again, Credit Suisse sort of doesn't deal with it, the result of which is the Georgian Prime Minister, former Georgian Prime Minister, continues to sue them. And what could have been probably a $200 million settlement ends up being over $1 billion. So that's another one. Greensill is probably the next big one. And, as I said, I think that could be the most critical one because they lose the trust of their clients. After that, there's another one called Archegos, which is a big US hedge fund that kind of implodes. And it comes hot on the heels of Greensill. And a lot of banks lose a little bit of money, but Credit Suisse loses a lot of money. And again, that kind of exposes that they've just got no control risk. They're just sort of, people are running free with the money. The backdrop to this, which maybe the kind of characters you're alluding to, is a sort of succession of CEOs and senior executives who are, to some degree directly involved in this and to some degree not. And there are also scandals around them, which are not really banking scandals. They're more like personal conduct scandals. So the two that really stand out, I think, are Tidjane Thiam, who's this French Ivorian executive who's made big waves in the UK in the insurance industry. He's kind of a superstar, super charismatic guy. And he gets hired to be the CEO of Credit Suisse around 2017. And Tidjane is not a popular choice with a lot of the investment bankers. They think he's a bit arrogant. They think he doesn't really understand banking. Tidjane sort of fights back and says, I'm a super intelligent guy. I had the highest marks in my class. And, I do understand banking. But what happens is that he ends up sort of creating like a little inner circle of trusted colleagues. And kind of a lot of people feel pretty isolated by him. He's also, I think, don't think this is, I don't think anyone would question there is like racism in Switzerland towards this guy, and I think that it's sort of racism and xenophobia, and Tidjane suffers because of this a lot. And I think his kind of paranoia in his inner circle just becomes even, gets even deeper into this inner circle as a result. And there's a lot of people trying to sort of undermine the work he's doing, don't trust him. In the end, it kind of blows up because one of these sort of trusted advisors, he falls out with him, a guy named Iqbal Khan, who goes to work for their big competitor, UBS. And in the period when Iqbal's not working, so he's sort of left Credit Suisse, about to join UBS. One day he's on the way to a restaurant with his wife in his car, and he realizes he's being followed. And so he kind of starts, zigzagging through the streets of Zurich, and this car keeps following him. Eventually he shakes the car off his tail, gets out of the car, walks towards the restaurant, and the guy from the car is right there in front of him. And they have this huge fight in the middle of the street in Zurich. And it turns out they've been spying on him. Tidjane denies he knew anything about it. It wasn't his fault. Somebody else in the bank had hired this guy. Then they have an inquiry, and it turns out they've spied on 7 people. Tidjane still denies any of it, but at this point his days are numbered. There's no way he can go forward, so Tidjane leaves. Not long after that, they hire a chairman so this is a scandal. The point of telling you that story really is, 1, it's kind of crazy, but 2, it's a scandal that doesn't really involve banking at all. It's just got nothing to do with banking, but the CEO ends up leaving. And soon after, the similar thing, they hire a new chairman. They hire a guy named Antonio Otarosario, who's former CEO of Lloyds Bank in the UK, and was kind of, lauded for turning around Lloyds Bank after the financial crisis, although sort of, and he's kind of this glamorous figure and in and out of kind of favor from time to time. So Antonio they hire, and he's going to clean up the bank now. It's his job to clean it up after Tidjane. He gets there just as the Greensill scandal explodes and Archegos happens. And so he's sort of a rampaging bull around this bank, and he's kind of telling everybody, they're not doing their jobs properly, and he's going to clean it up. And it turns out this is during COVID. He gets caught going to Wimbledon when he should have been locked down somewhere. And then he sort of apologizes and says he didn't know the rules. And then it turns out he did it again somewhere else. So he gets fired, and it's got nothing to do again with, banking. It's to do with conduct. But what's happening there is there's this like kind of roller coaster of changing executives at the top level. And some of them were like big ego, charismatic people, but that upsets a lot of people inside the bank. And so actually the rumors and things start about them all the time. And it just sets in motion the kind of beginning of the end again.
Yeah. I mean, it's amazing how little banking gets done in banks sometimes, you know, and the same thing goes for hedge funds. You know, I don't know if you've read the book about Bridgewater, but 90% of the time at Bridgewater, there's nothing to do with finance or investing going on. It's like just watching each other and having fights about, you know, how to do things.
Well, that's I think a really interesting point, because when I'd be doing the reporting for this book and I go to Switzerland and say, why did Credit Suisse collapse? Undoubtedly, the executives will say things like, oh, you know, its tier one capital ratio wasn't right, or liquidity coverage wasn't right. And I'd say, well, what about the fact the CEO got fired for spying, or the chairman got fired for going to Wimbledon when he shouldn't have done? And they kind of look at you like, what are you talking about? And then they realize, oh, yeah, that led to like a chain of changing CEOs and chairmen that just was like unsustainable.
Obviously, banks put a lot of money into PR to make it sound like these are, you know, even tech companies in some ways, and that they're working hard and doing normal things. Yet we keep seeing these scandals time after time at all the big institutions. It just makes you wonder, what is it about these banks? Is it because there's so much money involved? People are making so much money. You know, why is it so rife to have these problems?
So I think you've kind of hit the nail on the head. I think it's the money, right? They get paid so incredibly well that actually the sort of incentive is to push the boundaries. These people are getting paid so much money that it's almost worth the risk for them. And it therefore attracts people who are interested in that kind of life, you know, and it incentivizes them to push the boundaries. There's a number I've got in the book, and I can't remember it, but over the last 15 years or so of Credit Suisse, the share price basically doesn't move, or maybe goes down a little bit. But the CEOs and chairmen take out of the bank some extraordinary amount, like, you know, billions and billions of dollars is taken out of the bank in compensation for the top people, while the shareholders and the customers just lose money. And that, you know, that I think sums it up, right? Like, these guys, they lose their jobs, you know, but they're not ultimately punished. They walk away with money that is like lottery winner money.
Yeah. And they also, I think if you're making that much money, you equate that with self-importance too, which feeds into the question of ego, and then starting to be paranoid, and also the idea of losing the job is very painful because of how wealthy it's making you. You know, but it does. I mean, it's a pretty tired thing to say, but it does make you wonder, what's the point of banks? You know, in terms of in the economy, they're making so much money, but are they doing something so magical? I don't know. I can't quite see.
Well, I think so. There's a couple of things you said that I think are really interesting. So one, I think the self-importance thing, I find it staggering. You must find the same thing, right? The amount of times I won't say who it was, but in the reporting for this story, for this book, at one point I've done all the working. I've talked to everybody I needed to over and over and over again. And I get a call from a PR person to say, Executive X wants to talk to you. And I'm like, well, I got 2 days to file my book. So unless he wants to tell me that the stuff he's previously told me is not true now, or he's got some additional stuff that it really, you know, what is it he wants to say? Because I'm like, really, I got to file it like today, you know. And they come back and they're like, yeah, he really needs to talk to you. And I'm like, well, is it new stuff, or is he just going to tell me the same stuff? Because if it's just the same stuff, I don't need it, you know. And we go back and forwards a bit like this. And then I kind of realized, actually, this is not about me. This is not like him giving me information. It's about the PR person feeling like they need to have, you know, shown their boss that they've done everything they can. And I'm like, these are just people. Why are we tolerating? We're treating them like they're some kind of gods, you know, and like they're just ordinary people who are doing their jobs and I'm doing my job. Why are we giving them such importance? So I think that's one thing. I think the other thing that actually I think Credit Suisse really exposed is your point about like, what's the point of banks? So, and this comes a few months later as well with Silicon Valley Bank in the US, right? When a bank like this collapses, lots of things go wrong. But one of the triggers for Credit Suisse collapsing is an Australian journalist got on Twitter and wrote in kind of October 2022, words along the lines of big global bank, credible source tells me big global bank is going to collapse. That's it, right? That's what he writes. People then start retweeting it. It goes on WeChat. People start putting charts up and they're guessing that it's Credit Suisse. What happens next is that clients start pulling tens of billions of dollars out of Credit Suisse. So Credit Suisse has met all of the kind of requirements of its regulator. Its capital ratios are fine. All of the rules that are in place, it's met. Sure, it's breaching all these scandals and conduct is terrible, but it is essentially a secure bank according to all global regulators. And all of a sudden, because some guy tweets something, who's not even a bank reporter, by the way, he normally writes about like Australian real estate. Because he writes something that doesn't even mention them, everyone's pulling the money out of the bank. And eventually they kind of managed to stem the tide of money coming out for a while until it happens again a few months later. And so what you realize there is actually the banks kind of they exist only because we don't all pull our money out. They essentially what banks do is we put our money in and they take they leave a small portion of it in the bank and the rest of it they hand out. And if we all ask for our money back at the same time, the bank collapses, regardless of whether it meets all of its regulatory requirements. And the only way that these, like Silicon Valley Bank and Credit Suisse, didn't kind of escalate to something much bigger, another financial crisis, was really because Janet Yellen came out in the US and said, we've got you covered, and people didn't feel the need to move their money around anymore. Or in the case of Credit Suisse, the Swiss government, Swiss authorities said, you're going to go and merge with UBS, which is what happens in the end. And so what you realize is actually they're just kind of functions of the government. The government is just essentially, government creates money, and it goes through the banking system, but the banks themselves aren't really adding anything to it. They're just a source of friction. They're a place to hold it. And so what is the point? Like, I think maybe they support some kind of function, but does it justify them being paid the individuals taking billions of dollars out in compensation? That's to me, the real problem is, they kind of do something, but really it's like, they're not doing something complex or sophisticated that requires them to be paid so well.
It's just a facility for betting. And when you as an individual go to the bank to get a mortgage or a small business loan, they put you through the ringer because they think this is risky, and they're trying to make that small return. But then along comes the government of Mozambique, and they're like, yeah, sure, here's $2 billion, and it's really easy. So it also just something feels very unjust about that.
I mean, the Mozambique one, one of the things I find most interesting about that is even after they kind of find out that the money hasn't been spent the right way, they realize there's a problem. And so what they do, they realize Mozambique can't pay the money back, and they realize the money has not been spent on a tuna fleet, and it hasn't been spent on ports for the oil business. It's been spent on all this other stuff. And so they decide to repackage the loans and try and sell them on again. Their bonds are supposed to be paid back in a couple of years, but instead they kind of go, let's turn them into like 7-year loan bonds or 14-year bonds, and we'll sell them on. And they do this like fully knowing that at this point there is nothing hidden to the banks. They know how bad to Credit Suisse. They know how bad it is, and they just try and kind of package it up and sell it on again. That to me is like staggering, right?
Yeah. Have you become so cynical now that you want to stay out of banking coverage in the future? In your next books, are you going to be going far afield from this, you think? Or
I don't know. I mean, I'm pretty cynical, I suppose. But I think there's just a lot to be said in the banking world and finance in general. I think it just attracts such strange characters and, some of the behaviors that are kind of incentivized with the money. It's like inevitable that there'll be more and more of these things. What's really interesting to me now is like, as soon as Silicon Valley and Credit Suisse collapsed, and there was that moment where it could have become a big financial crisis, but didn't. Nevertheless, there's kind of debate among the politicians and regulators, especially in the US, especially in Switzerland, around what should we do now. And instantly the banks start trying to lobby for no changes to the rules, right? So, lobbying hard in the US, no changes to the rules. In Switzerland, UBS, the new CEO of UBS is out there constantly saying, there was some bad conduct, some bad apples, but we don't need any rule changes. And that is just amazing, right? Like these banks collapse, billions of dollars of value gone, they're wrecking whole economies. They're being bailed out by ordinary people, by taxpayers, and they turn around. Their first instinct is to turn around and say, we don't need anything changed here. That's just like staggering. I can't imagine how you come to that conclusion.
Absolutely. Well, I hope for one that you stay on this path, because there's a lot more to uncover, and obviously some great characters. You got Nazis, drug dealers, corrupt politicians, espionage. So mysterious deaths, or maybe not so mysterious, but thank you very much for joining us.
Thanks for having me.
That's it for this week. Thanks to Duncan for joining us. If you're in the UK, you can buy his book Meltdown in bookshops starting the 7th of November. Listeners in the US and other countries can pre-order it now before its worldwide publication in March. And if you enjoyed this week's episode, you might like Whale Hunting's merch, and especially our brand new Kleptocrat t-shirts. Check them out at shop.brazen.fm. Thanks for listening. We'll be back next week for more.
Whale Hunting is a production of Project Brazen. It's hosted by me, Tom Wright, and Bradley Hope. It's produced by Megan Dean, Claire Urban, and Arnav Binaikia. At Project Brazen, Mariangel Gonzalez is our project manager, and Charlie Barlow is associate producer. Ryan Ho is the creative director, with additional design from Andrea Claridge.